Hey, what's up, good people? Listen, there's a JP Morgan report that says retail investors are fleeing at a faster pace from individual stock since March of 2020. So, retail investors, you and I, are fleeing the stock market in individual stocks faster than 2020. That is sad, good people. That's sad. Hey, I'm Stock Up with Larry Jones. For those of you that don't know, make sure you hit the like and subscribe and the notification bell. Let's get the likes up on this one. Listen, if you're already subscribed, don't hit that subscribe button. But do a check, mic check, and make sure that you are subscribed because people are saying that for some strange reason, they've been unsubscribed, right? Ever since I've been saying that, my subscriptions have been rising. Okay, so let's do that. But let's talk about this. Matter of fact, let's go right to a chart. Let's look at this. This is why this is so disturbing to me. For those of you that are new to the stock market, right? This is the Dow and the S&P, right? So a good snapshot of the overall market. Hey, you know what? Let me put the NASDAQ in there and let me just show you guys why this is so disturbing to me. All right. So now we have all three indices in there, right? NASDAQ, S&P, and the Dow, right? So March, here we go. March of 2020. Here's where people were bailing out of the stock market. Stock market ran up, people sold down here, locking in losses, and look what happened to the market. So now here we are again. But this is not the first time, good people. This happens every time the market goes down. And this year, it's been a steady decline instead of all at once. Me personally, I wish I'm the type, I would rather see something like this and just let all of the panic go away, rip the Band-Aid off quickly instead of this slow downward. It's like an elevator and you on 100th floor and it's moving like molasses. It's way more painful than just a sudden drop. And that's what's happening. And this is why Wall Street calls you and I, retail investors, dumb money. Because we trade and invest on emotions. This is a huge, huge no-no. If you're in a good company and it is a fair evaluation and they're going to be around for a while, you're consuming their products, you're wearing an Apple Watch, you got Apple computers, right? You're ordering stuff through Amazon, those type of deals. You and your kids plan on going to Disney. You see people still buying $500 gym shoes from Nike. You get it. You understand what I'm saying? You're watching me on Google, which owns YouTube. They're not going anywhere. Yeah, you may have purchased it at a high, right? And it's starting to come down. But over the history of the stock market, look at what happened before. Somebody purchased up here and they sold down here. Look what happened. Now they're chasing, right? Then it happened again. It happened again. Then it runs up. It happens again. But look at that, right? But then let's go max. Let's just go max. Look at this, good people. All you have to do is be steadfast if you're in good companies, okay? And so that's why it's not a good thing to put all of your money into hype stock or hype crypto. And so what I want to tell you guys that are new is if you have good individual stock, don't be a part of this JP Morgan report. Don't flee your individual stock right now because the lower you buy a stock or crypto, any type of equity or store of value, whatever you want to call it, the less risk you have. You're literally limiting your risk. And so we can't trade on emotions. And listen, I'm going to also continue to tell you guys, short term and long term, what I see. We still could. That's could. I can't control it. Just like yesterday, the market was set to be red. And what happened? A state by state Fed came out. Remember I told you, and she said that she hopes that Jerome Powell don't overdo it, and we shouldn't be going more aggressive, right? What does that do? That causes the market to go green, right? And it causes the market to think more bullish, because if the Fed pivots and cool off the interest rate hikes, meaning not go so aggressive, instead of 75 and 75, maybe they go 75 and 50 basis points, or maybe they go 50 basis points and 50 basis points. The lower that number, the better it is for the stock market at this point. Because like Jeremy Siegel said, Professor Jeremy Siegel said, we're getting this data so late till the Fed is not even properly getting a good read on the data. So I want to tell you guys that are new to investing. This is not trading or day trading like I did the other day with that option play. This is not the time to tap out. It's just not. You're doing the polar opposite of what you should be doing. And you are part of what Wall Street calls you and your money. That's called dumb money. Google it. All right, good people. So I just wanted to come on and let you guys see this. I saw this report. Actually, a few days ago, I was looking for the report, and it just wasn't good, good people. It wasn't good. This is not something we want to be doing. This is something we want to stay away from. So let's flee this, all right? Let's not partake of this. And right now, so you guys know that watch the previous video, I'm gonna leave a box here. There's two videos. The one I made yesterday showing you guys how I made $12,000, but the thing says $10,000. You have to watch the whole thing, but you have to watch the video before that also, right? It's a two-part, part one and part two. Part one, I show you what I did, how I did it, how many contracts. And part two shows what it wind up gaining me, which was 12,000. Now, tomorrow I may do a video on what, people always ask, what would you do if you had $10,000? Well, I just made that, and I'm going to show you guys. I'll probably share with you guys what I would do with it. Okay. And you could just break that down. 10,000. You could say, hey, if I got 1,000, this is how I'm going to, portion it. Right. So it doesn't matter. If you got 100,000, do the same thing. So I'm going to deal with percentages. And so you guys could see. Now, remember, anything I say is not a suggestion for you to buy, hold, or sell. And so I just wanted to come on real briefly on today, Saturday, and let you guys know that this is not what we should be doing. Okay. I know it gets fearful. Now, one of the things you can do when you're looking at a sea of red, I do have a portfolio that is red, though I'm still 78 to 80% cash, meaning I still put into the market every month, right? But I don't put in as much, and I limit it to where I'm still 78% cash. So I'm putting money into my portfolios, but 78% of that I still keep in cash, and I play with the other. I invest with the other money. Okay. And so we're going to discuss that a little sooner. Now, one of the things I do want you to know is that, Weibo does, Mumu. I know you guys don't like to hear this, but if you got if you're looking at a sea of red, simply open up. I was talking to Ron Lewis, my good buddy. He says, I don't even look at it. So he's got a lot of red. I mean, a lot of red in one of his portfolios. He opened up a Mumu, and he has money in there, and it's 99%. It's 90% cash right now. And so he says, thanks for doing this. He says, I just look at this. Now you see opportunity instead of a bloodbath. All right. So we know we got the 15 free stock, but what they did was they upped it now. And here, let's do this. So now you also have this going on where if you just put in a penny, you could get $10 by just putting in a penny. All right, good people. So if you downloaded it, make sure you fund it, but let's not be dumb money, good people. All right. Again, make sure you check and make sure that you are subscribed if you aren't. But if you click that subscription button, it should be darkened. All right, we're gonna leave it right there. I love you guys as always, and I'll see you tomorrow. Live, love, laugh, and learn. You know what? Let's go out with this jam. Let me go out with my intro, my outro. But make sure, again, that you watch this video that's going to be in this box and watch the video after that if you want to make some serious money. Live, love, laugh, and learn. What's up, good people?